It's a beautiful sunny day today. I was gonna do this video in my office, but I couldn't resist. So I wanted to hop on here and chat a little bit about the SVB bank crisis, and I'm sure a lot of you are wondering how that's gonna affect the housing market. Let's chat about it. Stay tuned and hear from one of our local lenders later on in the video. First, I wanna say, don't panic. I've seen a lot of misinformation going around the internet about the bank collapse. Most of us are gonna be okay. As far as the market goes, the 2023 housing market will continue to experience some turbulence while it follows the mortgage rates and inflation. Rates were up over 7% in October, then dropped near 6% by the end of January, which caused a sweet spot of activity in the market again. In the past weeks, they had risen to over 7% before the SVB bank collapse, and since the collapse, the average rate on the popular 30-year fixed mortgage dropped to around 6.57% just on Monday. In real terms, for a buyer looking at a $500,000 home with 20% down payment on a 30-year fixed mortgage, the monthly payment this week is about $128 less than it was just last week. So for the spring market, we could be hitting another sweet spot of activity. Let's go ahead and hear more on this topic from one of our great local lenders, Kyle Rohrbaugh with Cross Country Mortgage.
Kyle Rohrbaugh, Cross Country Mortgage. Obviously some big news in banking and financial markets this week. Wanted to speak to Silicon Valley Bank and what is going on and its impact on mortgage, real estate. So when financial markets are in upheaval and there is a lot of risk happening, money will flow into the bond markets. That is good for interest rates. We've already seen rates drop from right around 7% into the mid sixes just in the last few days. Number two, the Fed is slowing its roll. They are not going to raise rates at the clip. They were expected to raise by a half point later this month, and it seems that based on projections, they might keep the rate flat. Many think that they really need to drop rates to let the pressure that is on these bank balance sheets come down. So we may see some improvement in rates. Number three, I think the last one is that when financial industry is seen as not as quite of a sure thing, not as quite of a safe place to put money, it flows into real estate. We have already a huge supply issue on the real estate side. We have housing supply is among the lowest that we've seen, and it is sort of a safe place to park cash if you're looking to make an investment. So more demand on the house buying front, less supply, rates coming down. I think it's an interesting time to think about real estate purchases right now, and we'll see what happens. But call me if you ever want to discuss any of this. Thanks.
Thanks, Kyle. That was great information. Anybody who is interested in learning more about buying or selling in today's market, I invite you to reach out today.